It's 10 a.m. right here in Lagos, Nigeria. Good morning and welcome to Business Morning on Channels Television. I'm Ini John McQuarrie. Well, let's hit the business space now. First of all, the Nigeria Export Processing Zones Authority and the Federal Inland Revenue Service have signed a memorandum of understanding for effective tax administration in free trade zones. According to the FIRS chairman, Mr. Mohammed Namani, the agreement will foster greater collaboration between the two agencies. On his part, the managing director of NEFZA, Adesoji Adeshuga, says that the MOU is aimed at strengthening tax compliance in order to grow the country's economy. From there, we'll move to the oil space. Prices gave up early gains on Thursday after parts of Shanghai imposed new COVID-19 lockdown measures, outweighing news of China's stronger than expected exports in May. Oil prices rose to 13-week high yesterday as U.S. demand for gasoline has kept rising despite record pump prices. An expectation that China's oil demand will rise and on supply concerns in several countries. Brent crude futures rose by $2.77 to $123.34 a barrel, while U.S. West Texas Intermediate crude rose $2.70 to $122.11 a barrel. U.S. gasoline stocks fell by a surprise 0.8 million barrels as demand for the fuel rose despite sky-high pump prices. We will drill in on that on our commodities market segment and find out how that affects you and I here in Nigeria. But that will be after this timeout. Yeah, let's do that conversation with Bolanle Agbaji, analyst with Financial Derivatives Company, for the second time this week. Bolanle, good morning.
Good morning. Thanks for having me.
Good to have you again. Well, I mean, oil prices, as of yesterday, was our 13-year high.
Yes.
$123.
Yes, yes.
Wow. Even when it's gone down to 121.
What? 22?
Yeah, because I saw 121.
Yeah, it was 121 earlier.
Okay, then it went to 122.
Yes,
I mean, the movement is just, you can't catch it.
It's still hovering around at least 120,
exactly.
Which is good for us.
Well, I hear good for us, and then I say I wish it's really that good for us. But there's so many things driving it. We see the U.S. inventory. We see lockdown. We imposed
new lockdowns in China again, and the fact that the U.S. inventories the stockpiles are actually reducing, and as well as.
Is it because of the higher demand?
No, in the past 2 years, in fact, before COVID started, a lot of some of these oil producers in the U.S. were already, reducing investments in that sector. So it'll be very difficult for them to pick up because a lot of them they don't have spare capacity. Basically, they've closed down a lot of their, drilling activities or reduced.
Why? Is it because of?
No, it's because we had seen oil prices decline, so it wasn't necessarily favorable for them to invest or keep investing in that, space. It's the cost of investing in the oil industry is huge.
Yeah, the infrastructure is very capital intensive.
It's very capital intensive. And, now that oil prices are still at about 120, some of these oil producers are still wary and still not believing the fact that,
this has come to
stay. You do have a lot more, investors now believing that it's here to stay. And that's just because of the fundamentals around. It's not been great, at least for the past 2 days, or actually this week, in terms of, the growth forecast that World Bank has come out with. And, the World Bank now has mentioned that this is the biggest drop in forecast in the past 8 years.
I think it went from 5.7 to 2.9.
And that's just
so huge.
It's huge. It's just so many factors driving this. You already have the pre-pandemic, pressure on, the growth. Demand growth in general. And now you have, the war in Ukraine as well. You have, issues to do with supply disruptions.
So the war in Ukraine has to major impact.
Yes.
So it is one of the factors fueling the surge in oil prices,
yes,
which is good
in terms of Russia.
Yes,
yes.
In terms of Russia,
yes,
which is good for some parts
of the world. Mainly the oil producers.
Yeah, but even some of those oil producers also feeling the impact. I mean, we're talking of food crisis.
Yes.
We're talking of even drop in demand now.
Yes. And I think the interesting thing I saw recently is the fact that the World Bank mentioned that at least this year you're going to see food crisis because of lack of access. But in terms of next year, you'll most likely see food crisis because there's lack of food, which is scary to hear. They've called on many central banks around the world to, as much as you're increasing interest rates, which is also contributing to the fact that we're seeing this drawdown in growth. They also have other policies in terms of access to credit for agricultural farmers, because the inflation numbers that we're seeing around the world is also mainly to do, apart from energy crisis, is also mainly to do with the fact that Ukraine is one of the largest producers of many.
I think they call them the bread baskets of the world.
So it's really, I hope the talks between Ukraine and Russia via Turkey would actually come, through.
Yeah, well, I think I heard the minister of Russia saying, well, they've done their own parts, giving the condition.
Yes.
That
so they want sanctions, that they've been imposed on them to actually ease down a bit, and so they would allow, some of the stranded grains in Ukraine to pass through the Black Sea. But in actual fact, it's a terrible time for the global economy, especially emerging market economies.
I don't know if we've been through this before.
We have. So, the World Bank actually linked it with the stagflation that we had seen in 1970. But they highlighted the fact that the difference between now and then is the fact that then US dollar and major currencies, were not as strong as the way they are now. And also in terms of balance sheets, the major banks or central banks of the world were not, this strong. And so now they have the power to actually, make sure that this doesn't drag on for so long. So
for me, one scary factor is we don't see an end to the war.
Yes.
I mean, with COVID, we were seeing vaccine, and we were seeing efforts, and then we were seeing new ways of living. So living with COVID was able to bring back some sort of activities, economic activities. But with the war,
it has changed.
Yes, there's no way to get into President Putin's mind to, no way to do that. So we don't see an end to it. And even if the war were to end today, the impact is going to spill on for a while.
Yes. And that's why, they've reduced the forecast for not just this year, even next year as well. And next year, lack of food, insecurity, poverty, those are the things that we're most likely going to be seeing in the near term. It's not really great for us. But I think if a country is positioned in a proper way, in the sense that shocks from outside would only affect the country in a limited way, by bracing yourself, by investing in infrastructure that would actually increase productivity within the economy, is what the World Bank has actually come out to say would more or less soften this blow.
If we had our refineries working,
we would be on the smiling side of things, in terms of,
because we'll just refine what we need and sell the rest at this high price, and increase our reserve, which is currently depreciating,
and obviously reduce our debt. The debt management office has also come out to say, our debt has increased by about 2.04 trillion naira, which is although they did mention that we've still not, I think we're currently at about 23%. It's still not up to the 40, but I think
what's the reality?
And debt sustainability is more important than actual debt. How do you sustain this debt that you've already gotten? And are you spending it on recurrent expenditure? Are you spending it on capital projects? Goes back to what the World Bank has actually been saying. If you invest in capital projects, at some point you're reaping the benefits of this investment. And obviously it's increasing productivity in the long run, and you're able to fight off all these unprecedented attacks in other parts of the world.
Well, just as we said on Tuesday, let's hope that the incoming administration will give very close attention to some of this, because actually it's not a very good time in the world, but
it's not.
Nigeria does have the potential to be positioned, you know, to buffer some of these shocks, and even to an extent, you know, kind of get some economic income.
Yes.
You know, imagine oil going as high as $123, and then we still cannot meet up with our quota.
And
you know, and our reserve is still depreciating.
Yes.
So
it's a very sad time in terms of, you know, Ghana, for example, were more or less kind of in the same position as Ghana, and Ghana doesn't even produce oil, obviously.
But they had surplus from oil last time.
Yeah, they did, but right now, you know, the demand is just huge at this moment, you know. And also they are very, you know, they produce cocoa, obviously. They're one of the top producers, but they're still facing it. I think the inflation numbers for May came out at about 27.
Yeah, I know the inflation is really high.
It's huge. Interest rate is about 19%, the highest, you know, since forever. So it's not what kind of in the same position as Ghana, and Ghana doesn't even produce oil. So it's a very
we shouldn't be in the same position with Ghana if we do have oil as much as we do have. We also have gas. In fact, we have the largest gas reserve in Africa.
We should be on the smiling side of things.
Like Algeria. Algeria is smiling at this time. Well, what else? Let's look at the commodities space now. What's going on? I know we're in the planting season. It's not very buoyant season.
It's not, but I think the good thing is demand is not necessarily picking up as much. So it's really...
Are people not eating?
People are eating, but I know food, I think it takes about more than 50% of any consumer's income. So right now, if, you know, incomes are tightly or squeezed, it's more or less going to face, the impact would be on the demand for commodity prices in general. So although we're seeing most of the domestic commodity prices increase, but like I mentioned, compared to years before, the rate of increase should have been much higher. But I think the dampening demand is more or less curbing this hike in food prices.
Do you see, I mean, at the end of the planting season, do you see things changing?
I do hope, in terms of, you know, if the harvest is buoyant, it should, you know, more or less bring prices
down. Do you think
it
will be buoyant? Do we see factors?
I hope it will. We haven't really heard so much when it comes to, you know, herdmen's attacks and all that. But I do hope that, you know, the harvest season, but we wouldn't know until we get to that point.
Okay, so what else is happening
internationally? Obviously, price of wheat, corn, you know, they're record highs.
Wheat is like gold now.
Wheat is like heavy. It's serious gold at the moment. It's currently trading at about $1,087 per ton. Corn is also at about 700, which is, and also we for corn especially, we have increase in supply, but it's not really translating to prices. Although for wheat, the weather in the U.S., the fact that we're not getting supplies from Ukraine, Russia, those are, you know, affecting the price.
But we did have a collaboration or an agreement, I think, a couple of weeks ago with Russia to get some supplies of wheat.
Yeah, but you know, those supplies would feed into the market and it's off. So we still go back to a point where, you know, we need increasing supply. You know, continuous supply is what we need, not a point where you increase supply now and expect that, you know, that translates into lower prices in the future. No, it has to be something that's continuous.
That's continuous.
Yes.
And we can't do it for ourselves.
Well, most countries, especially Europe, I don't think they can do it for themselves now. I'm sure most of these countries are looking for ways to actually start investing, take advantage of technology and, you know, find ways. And I think now it shouldn't more or less be about, you know, weather conditions and where countries are positioned. Right now, technology is more or less advanced in such a way that we should, you know, most countries will probably be thinking of, you know, trying to produce some of these products, despite the fact that they're not, you know, positioned in the right...
I think you also made a point there, because I did see where Egypt, they have a mutated wheat. Yes, you know, so that we're not waiting to say, oh, we don't have the weather for it.
Yes.
I think hypopondics is also another way that they're using to overcome.
Yes.
If the UAE can plant and harvest, then I don't know.
Then I'm sure other, but it's obviously, it requires, huge investments as well. So, and a lot of these countries, they're still facing the heat of, you know, pre-pandemic supply shortfalls and high inflation rates. It's not great for most countries.
Let's borrow money and do it in Nigeria.
Borrow concessionary funding is what we need, not, you know, debts that we can't actually pay back.
All right, Bolanle, thank you so much for sharing your thoughts with us this morning. Bolanle Agbaji is analyst financial derivatives. Thank you.
Thank you.
And I guess that's it for the week.
Thank you.
We'll take a break now. After the break, there's a learning platform that I think will interest you. Find out after the break. This is Business Morning on Channels Television. You're welcome back. Well, a premier learning platform powered by Access Bank and developed by Accelerate. The Phoenix project is intended to bridge the gap between the knowledge required to come your way in the creative industry and the resources required to build a potentially successful career. Let's just find out more about this. We have two guys in the studio, and I wonder why it's not a male and a female. Well, we have Biodun Laro, project manager with Phoenix Project, and Ifeanyi Kwonta, operations manager at Phoenix Project. Good to see you guys. Although I'm not so happy. I'm not represented.
You've earned your grievances. Don't worry. Next time we're here, we'll do better.
All right, great. So tell us, what's this Phoenix Project about?
So the Phoenix Project is a premier, like you said, a premier learning platform designed to help young creatives who are aspiring for potentially successful careers within the creative industry to bridge the gap between the knowledge they need and the opportunities that they so deserve to start something new for themselves and, you know, unleash their full potential, as we like to say back at home. Sequel to the unfortunate events of the NSAS protests, we asked ourselves, how do you arm young people who are in the creative industry?
Phoenix Project is a company, or Phoenix Project is just a project?
So it's an initiative.
Okay.
We will identify as a company because we are now trying to create a separate identity from Accelerate, which is our father brand. So now
okay, so Access Bank is just a sponsor?
Access Bank is Accelerate is empowered by Access Bank, and the Phoenix Project is an initiative by Accelerate. So being an initiative of Accelerate, we're also powered by Access Bank as well.
Okay, baby, yes. of the baby of
exactly.
the baby. All right, fine. So, I mean, I think with the explanation that Biodun just gave, every youth, every young person, even not so young people, do have dreams and aspirations, so they are captured in this. So is this for everybody, or what do I do?
I mean, that's a great question. The truth is actually for everybody. We want to say that it's from 18 to about 35, but then anyone can be a creative. Even a 70-year-old can still be a creative.
Exactly.
Yes. So all you have to do is actually just log on to the website, www.phoenixprojectng.com, and then just register, and that's it. You can kick off with all your course bundles. We have 3 course bundles: the social media for business bundle, the business of entertainment bundle, and the film and production bundle. So once you kick off with one of those bundles, you're good to go.
Okay, so, but how do you capture this, or why do you have, you know, these different bundles? What's the target, and what do I need to be a part of it?
Great. So we have about 12 learning modules on the Phoenix Project, ranging across script writing, film and production, songwriting, business of entertainment, becoming an influencer. So what we have done is grouped these learning modules into 3 different bundles that kind of address the areas that the bundles are designed to provide holistic knowledge on. So like Ifeanyi rightly mentioned, we have the film and production bundle, which has courses like Introduction to Production, Introduction to Film, and Script Writing. And then our Business of Entertainment bundle has courses like Business of Entertainment, Entertainment Law, Branding, and Songwriting. And then we also have our Social Media for Business bundle, which has courses like Becoming an Influencer, Business of Vlogging, social media for business, graphics design, and a bunch of other courses as well. Now, to be a part of it, all you have to do is have the desire. And what better time at a time like this when, you know, the universities are on a partial break, the youths are going to be engaged to have something to get their creative juices flowing. And our program design is such that it just doesn't end at online learning, because the courses at the beginner level are designed at the online, are delivered online. And then we have in-person training sessions that are done in partnership with the School of Media and Communication at the Pan Atlantic University. And then we also have a third level, which we're calling the Phoenix Den, but I'm sure we'll get into that later.
Yeah, we'll get into that. So do I need to have been engaged in this line, you know, of script writing, of media? Do I need to have been in that line before I can do this?
The unique thing about our program design is we have designed it across 3 levels: beginner, intermediate, and advanced. So at the beginner level, all you need is the interest, right? Because you get to learn from subject matter experts in the industry, which is why we chose our selection of facilitators. We have the likes of Kemilala Akindoju teaching production. We have the likes of Abba Makama teaching introduction to film. And we also have the likes of, Umita, who is teaching business of vlogging. Enyolua Adeolua, Lip Gloss Boy, is teaching you how to become an influencer. So these are people who are at the forefront of affairs, who are subject matter experts, like I said, in their respective fields, teaching you the practical knowledge on the go. And when you're done with that, you've kind of gotten, like we said, the course bundles gives you the breakdown that you need to get more knowledge in those areas. We then transition you into the hands of the School of Media and Communication, where you then get to learn theoretical knowledge from the learning experts.
All right, fine. So do I just log on and then it's plug and play?
It's literally plug and play. The courses are already on a platform that you have to, all you
they're already on, even as we speak.
All you just need is data.
So all you need is to
That's all you need.
All right, so give us the website.
So it's www.phoenixprojectng.com. And once you log on to that website, you register, put in your details, your name, your email address, and all of that. And then you log into the LMS. And with that, you have access to the course bundles.
So once I'm done with that course bundle, do I get a certificate? Is that what I present to go to the next level?
Fantastic. Yes. Yeah, so pretty much once you're done with the beginner level online, our in-person training sessions happen on a quarterly basis. And so we require the certificate that the LMS has generated for you at the beginner level as verification that you have actually completed the beginner level. And then you submit that back to us for us to admit you into our quarterly in-person training session.
Okay, so this beginner level is just anybody can do it.
Anybody can
go
do it.
Once you get the certificate,
you can then come
when it's now time. But how do I know? I mean, you say you do it quarterly. How do I know that you're
So right now, our beginner levels run concurrently. So what people have to look out for is when we do our call for applications for intermediate and advanced sessions, which we launched on Monday this week. So you can follow us on our social media handles. You can, once you are a registered learner on the platform, you would get the email, and you'll also see it in press mentions as well.
Okay. So a registered learner is someone who has gone through the beginner's stage.
It's our intermediate and advanced levels are learner exclusive. So you must have gone through the beginner level for you to access the intermediate and advanced sessions, because there's a lot of sweetness right after that.
And you talked about the Phoenix Den.
Whew, the icing on the cake.
Okay.
So the Phoenix Den is a phase of the program where all of our learners who have made it to the advanced levels and passed the assessment that will be provided by the School of Media.
The advanced level is the third level?
It's the third level. So let me just break it down further. Like I said, the intermediate level is more theoretical knowledge from School of Media and Communication. And then at the advanced level, you get training in employability and entrepreneurship skills, because we acknowledge that not every creative would either want to start their own business. They would also want to gain industry experience, right? So School of Media and Communication does provide that training, and then we usher you into the Phoenix Den once you're able to pass the assessment at the end of that level. Now, the Phoenix Den, like I said, is a phase of the program where you get access to internship and funding opportunities for creative businesses. So what we have done is created the first of its kind for the creative industry, where creative businesses now have access to incubation, which you only hear about for tech businesses, right? But now our partners, the Nest Hub, have now created a program where they're able to incubate creative businesses. And for those who are not going the entrepreneurship route through the incubator, we have partnerships with several creative industries, several creative companies in Nigeria's creative ecosystem. So the likes of Beat FM, the likes of Film One, the likes of DSTV, that our learners can get access to internships
Internships, not jobs.
Well, it's paid internships.
Okay.
And again,
how long?
For 3 months.
Oh.
And it is our desire that at the end of this program, our learners have proven themselves enough to be able to be retained in that space. Again, we are a capacity building organization, right? We want to maximize the potential of everybody who walks through the Phoenix Project and ensure that they have the skills. Even if they do not get retained in their places of work, they have what it takes to walk into any media organization or any aspect of the creative industry and say, yes, this is where I'm from, and they will be our elite network of learners. We're calling it the Phoenix Project Global Talent Pool. So literally, creative companies as well can come to the Phoenix Project and say, you know what, I'm looking for people who are gifted in script writing, people who are able to write music, people who are able to go into production, people who can do film. We're looking for the next batch of influencers, and you can find them all within the Phoenix Project Global Talent.
All right, Ifeanyi, how long does it take to go from the beginners to this advanced to the, internship? How long?
So we have...
In case ASU calls off strike.
I mean, so the beginner level is actually learner-paced. So it's actually at your pace. You can finish that in a day or two. But then by the time we space it out, you can finish that in 2 weeks. But from the beginner level into the intermediate and advanced, we have actually put that at 3 months. So our in-person sessions is a 10-day training with the School of Media and Communication. And after that, we now select the few people that would go into entrepreneurship pathway or the incubation pathway. And that is 3 months into that. So we don't exactly classify that as part of what we have said we would do for the timing, but then it's 3 months basically.
Okay, about 3 months. Okay, Biodun, you talked about funding.
Yes.
That's always very interesting.
Yes.
When you look at interest rates and access and
Yes.
the requests for collaterals.
Yes.
and all, how does that work?
So the final stage of the Phoenix Project is what we're calling, especially for those who have gone the entrepreneurship route. So we're calling it the Phoenix Pitch Series, where think of like your Lion's Den style setup, where people who have gone through incubation now have the opportunity to come and present their business ideas, because we have funding set aside to issue to these businesses as a way of empowering them to go and unleash their potential. Like we said, the end pathway is for those who are going into like internships and job opportunities potentially that have been created by some of our partners in the creative industry, and the people who want to create their own businesses. So for those who are going to create their own businesses, Access Bank itself has set aside some funds to say we're going to listen to these business ideas and we're going to give money to people to go and set up their thing. Our partners at the Nest Hub they're also portfolio investors, right? Where they have a number of companies who have given them money and trusted them with their funds to put into creative businesses as well.
All right, I can't help myself but ask, what is Phoenix Project? What are you guys benefiting from all of this? It just sounds like you're doing it for the youth. Oh, we do have the passion to help them. What is your game?
So I think Accelerates was founded on 3 ethos: to empower, to educate, and to entertain. We've done a lot in the entertainment space. We've done a lot in the drives that we've done. But now it's time for Accelerate to kind of give back and actually empower young people. This project literally was born off the back of the unfortunate incidents of the NSAS protests. And it's a corporate social responsibility for us, right? To say, okay, how are we impacting the space that we operate in? How are we empowering youths? We've also done in the past Accelerate Filmmaker Project, where people come into Accelerate for a period of 2 weeks, and they get to learn from the likes of Ni Akimolayo, Kemi Adetiba, on what it takes to actually make films. And these films have gone on to be showcased in multiple movie festivals across the world. We've won 2 AMVCAs, we've won Picture Awards, and a whole lot.
Blow your trumpet.
A win for the creative industry
All
is
right,
a win for
it's
Accelerate.
interesting to know that Accelerate is, of course, prioritizing CSR. Very interesting. Thank you so much, Biodun Laro and Ifeanyi Kwanta, for this initiative. We do wish you the best, and I do know from past experience, any project that comes here, so you guys better be ready for the numbers.
We're ready.
They're going to come. They're going to come.
We are ready.
Come as you.
Interesting that you mentioned that in our first month, we had over 1,000 learners sign up onto the platform. Hence why we're like, you know what, we have to start our
Expect 10,000 now. Thank you so much for coming on the show. We do wish you the best.
Thank you so much for having us.
All right. So let's move over to the market now. Yesterday, we saw that the equities market in Nigeria dipped for the first time this week. It's been an interesting run, bull run from Friday, but we saw that it went down yesterday. It was down 0.14%, and about 41 billion naira was off the market value yesterday. Has this come to stay? Will we pick up today? Will we have that bull run back again? Let's have Abdul Rashid Momo joining us now to share his thoughts. Good morning, Abdul Rashid Momo.
Good morning. Can you hear me?
Yes, I can hear you. I can hear you, actually.
Okay.
So, is the bear here to stay? Is it just visiting?
Oh, you see, the way the market is now, we have seen the last high, which was about 54,000 points on the index. We've not seen any rally that's beating that point yet. So, until those areas are taken out before we can see. But for now, there's no new low and there's no new high. So we'll say the market is neutral, but on the bearish side. But one interesting thing I observed, when we are talking about technical analysis, you have to go back to history and see what's happening. I see a scenario where the market is playing the same picture it did in 2006, when market rallied from about 20,000 points to about 54,000 points, and trended between 54,000 points, about 50,000 points for some time before the market went up. So I don't think there's going to be any new high for now. I think market is just going to trend within those levels for now. Even we'll see a correction to the downside, we might be seeing close to about 52 to 50,000 points.
Wow, I hope we don't get back to that 50. I haven't hit 40. But I mean, there's been a lot of movement with FBN holding in recent days. Yesterday, I think there was a lot of profit taking on FBN holdings. So we saw it on the top trades, and the other day it gained. You know, it's just going wavy like that. Is there any particular thing that's driving it?
No, normally, the market is always very transparent. So if there's a deal in exchange, you always alert. I think that the change of hands in big, they were very large chunks. I think it has to be within the big stakeholders in First Bank. They are changing hands. So that's why you are seeing such volumes. They were actually major deals, large chunk of transactions in a bulk. It was not all for the market. There were actually about 3 or 4 chunks that were traded. So that's why you saw that that large volume. It was not really as per different traders. It was I think it was a large holding. I wouldn't say who it is. I might know it, but I might be wrong. But I think it has to do with the big player. One of the big players in First Bank. Yeah.
All right. Another counter that seems to be, I mean, I don't really understand, is the agriculture. Presco and Okomu. Yesterday, Presco was also on the top trades list. Is it that investors are beginning to notice them, or what's going on there?
No, these were stocks that actually spiked. I mean, you can imagine to about Presco went to about 200 naira before it started reversing. So possibly for what I'm seeing now, investors might be seeing areas. I think this might be good entry point for them, because the truth is that these stocks, they don't have volatility. They don't have the volumes are not much. So buying now might be another rally to actually come, because when those stocks were going up in pairs, I knew there was bound to be correction along the line, and that's what we are seeing for now. It might be another rally for it, but because the way the market is behaving now, the picture is not too clear. So for you to get a clearer picture, you don't have to look at individual stocks. You have to look at the various indexes where those stocks belong to. And from the various indexes, I can see that, as I said earlier on, the market, it's playing what it did in 2006. There's bound to be correction, but it's not a bear market. Markets need to go down for it to go up again. So we are going to be range bound for some time now. That full rally needs to stop. There must always be time to rest. So the bulls are taking a rest now.
Okay, the bulls are taking a rest. We'll see how long that. We'll see how long that rests will be. We hope it won't be for too long. Well, thank you so much, Abdul Rashid Momo.
It's always good to have a rest.
Yes, okay, of course. It's necessary, actually, to have a rest.
Yes. Yes.
Thank you so much.
Okay,
Head Capital Market, TRW Stockbrokers. Enjoy the rest of your day.
Thank you very much. Bye.
We'll head to London next, but that'll be after the break. This is Business Morning on Channels Television. You're welcome back. In the UK, we are back talking about the cost of houses. Well, in the year of the squeeze, it should not come as a surprise that estate agents have complained of a drop in demand. We have Juliana now joining us from our London studios to give us the details. Good morning, Juliana. I can almost say that we've talked so much about the cost of houses in the UK.
Good morning, Innie. We have, and that's because this is the 11th consecutive month that house prices have risen 1% in the month of May. This is according to data released by the mortgage lender Halifax. And so the drum roll is it's going to cost you, on average, about £289,000 to buy a home in Britain. And of course, depending on the region you're interested in, that fluctuates. That £289,000 is the equivalent of about 150 million naira. And like I said, if you want to live in the capital, you're definitely going to be having to pay more. I think one of the things that property experts have pointed out is this is a slow growth. So 1% is the lowest rate we've seen in the month of, well, in the year 2022. But if you go back a year, so in May 2021, you were paying 10.5% less for a property. So it is a concern, particularly for first-time buyers who would have to cough up, if you think, between 5 and 10% minimum for a deposit. That's about £15,000 to £18,000. And where are people going to be getting this money? Because of the cost of living squeeze, lots of people are eating onto their savings now. So on the one hand, for some, this is good news. But for a lot of people who are trying to get by, this is really frightening, especially because it just costs so much and people can't afford to buy them.
Yeah, always a mixed bag when we talk about this cost of houses. And then there's a report from the British Chamber of Commerce about growth contracting by the fourth quarter. I believe, Juliana, you have looked into this crystal ball and seen this a while ago. Why are they bringing up now?
Yes, I did look into the crystal ball. By the way, of the notes of the Governor of the Bank of England, Andrew Bailey, you're right, we have had that startling report from the British Chamber, but we also did hear, of course, from the OECD yesterday, who have pointed out that they believe the British economy will stagnate next year, growth of about 3.6% this year, but stagnation next year. And this is behind the Eurozone, behind America, who are expecting to grow by between 1.2 and 1.6%. And that's really because the consequences of Russia's war in Ukraine is really spilling over, and it's affecting Britain especially because it's leading to high energy prices and also food insecurity, because we know that those regions are the breadbasket of Europe. If we try and have a more focused look on that, petrol prices, that is dominating headlines here in the UK today, because for the first time ever, it costs more than £100 to fuel an average family car of petrol. Of course, if you're using a diesel car, that's worth more than that. It's called a national fuel crisis. If you are a driver in the UK, you will see that the roads are a little bit sparse. People are second-guessing that trip to pick up somebody or to go somewhere because it is so expensive. So, you know, this cost of living crisis that we talk about, sometimes you do hear business stories and you think it only affects certain people. In the UK, it really is affecting everybody at the moment because wages are just not going as far as they used to.
Yeah, Julian, I can tell you, not just in the UK, in Nigeria and everywhere else in the world is affecting everybody too. Thank you so much, Julian. I will certainly have more conversations later on at 1:30. Let's head to the crypto space now with Ladi. Ladi, is that market doing any better?
No, not any better. It's still extreme fear in this market. This is the longest lull we've had, of extreme fear. It's been running for over a month now, and it still keeps going. Traders are asking when greed, because we've not seen greed in a while in this market. Market cap, $1.24 trillion, down about 0.39, and we see a volume trending downwards this morning. It's down about 27%, and Bitcoin dominance, 46.52. We see price of Bitcoin there, $30,297 this morning. It's been ranging between 29,000 and 31,000 for a while now, in a tight range. Traders are expecting a breakout, but what direction is the question, either up or down, but a breakout is imminent in this for the price of Bitcoin. Volume traded $24.38 billion, and we see Ethereum there, $1,797. That's down about 0.22%, and volume traded $14.47 billion, and we see it's a mixed bag on the top alts by market cap, with eCash the biggest downer this morning from that bullish run it had recently. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Hello, Olumide.
Yeah, hello, Ladi. Yeah, happy Thursday.
Yeah, happy Thursday. Great to have you, Olumide. So there's talk about Bitcoin miners not getting as much profit from mining like they used to, with the price of Bitcoin, still far from the all-time high. What does this mean for the Bitcoin network?
Yeah, it's not surprising. Just like you rightly said, you look at the fear factor, it pretty much tells you what investors are really worried about. And also the fact that Bitcoin has lost more than 50% from November high has really made miners' revenue plummeted to drastic level, despite the fact.
All right, seems we lost Olumide. They will try and get him back. But we're talking about the top alts by market cap. That we see it's a mixed bag. And XRP at 40 cents, they're trying to get back above that level. And the Cardano, it's up about 0.80%. Olumide was talking about miners not getting as much as they were before the price of Bitcoin actually fell. And looking at HNT now, we see it's $11.53. That's up about 14.14%. And the FTT, token for the exchange, up about 5.82%. And GMT there, that's down below $1 at 99 cents, but it's up 4.83%. Trying to see if that could get back above $1, because it was trading above $1 for a while now. And Tezos, $2.12, up about 4.15%. And we have Teta there, one of those the tokens that for the metaverse, they were doing pretty well before. Now it's trading at $1.36 per coin, up 3.67%. And top 5 losers, we see Decred there, $33.46, down 6.51%. We see eCash also getting on that losers counter. It did have a run recently, about 3 days, and we're seeing traders take profit on that counter now. Let's see if we have Olumide back now. Hello, Olumide.
Yeah, hello, Ladi.
Yeah, you can conclude your thoughts now.
Yeah, so what I'm really saying is that, we're seeing a moderation in the hash rate because revenue has plummeted, despite the fact we saw an uptick in Bitcoin mining revenue this week, going as high as $27 million. Really, what's really happening is that the macro around the market still weighs on Bitcoin bulls. Tomorrow the inflation data in the American economy is going to come out. Any upside definitely will make the US Fed more hawkish in taming inflation. But if we see a moderation on that, maybe pretty much it could make Bitcoin break above the 33,000 resistance level. But right now, things are not looking good. But recent research from Deloitte suggests that crypto adoption is going high, because they're seeing about 75% of American retailers going into the crypto payment. So it tells you that the market is still oscillating between the $25,000 support level to the $33,000 resistance level for Bitcoin. So time will just tell which will fall first, Ladi.
Right, and everyone is searching for which direction, because we know a big move is coming, but Olumide, it could be down, right?
Yeah, exactly. And that's why all eyes is on the inflation data. Any upside data on that will definitely push Bitcoin below $28,000, Ladi.
Right. Well, we'll keep tracking that. Olumide, thank you so much. So much to unpack, with that Bitcoin price. Thank you so much, Olumide.
Yeah, thank you.
So looking at the top losers there, we see Gala token also down about 3.51% at 7 cents. So right now it's a mixed bag. Traders are watching, all the data coming from the U.S. and other parts of the world to see where risky assets lie. We've seen that impact also the equities market in the U.S. So it's all about direction we're looking for right now in this market.
Well, I don't think we are going to look too far because I'm almost sure inflation figures tomorrow from the U.S. will not be looking friendly at all, and we know how the market reacts.
Exactly. Except for Russia, that's tending down.
Yes, I don't know how they're doing it. The ruble is the best performing currency in the world at this time, man.
Quite interesting.
We need to peek into their brains and see how they're thinking and how they're pushing it. Well, thank you so much, Ladi, for that update from the crypto space. And that's where we draw the curtains on the program for today. It's just one more to go tomorrow. And thank God it's Friday. But let's just be patient and do that tomorrow. I hope you've had an interesting outing with us today. I'm Ini John Mekwa. Talk to you later.